Big moment for big tech as Amazon reports in just about 1 hour. So let's bring in our experts. Mark Mahaney is head of internet research for Evercore ISI, and Jason Snipe owns that stock. He's with Odyssey Capital, also a CNBC contributor. Welcome both. It's good to have you.
Good to be here.
Mark, first and foremost, does everything come down to AWS growth?
No, but most things do. So you had deceleration, sort of surprising deceleration by both Azure and Google Cloud. And so the market, that's why Amazon's sort of underperformed the last day or two. And so, yeah, the bar got lowered. It's kind of simple now. The street's looking for 19% revenue growth for AWS. Less than that, stock trades off. More than that, stock trades up. Now, that's everything else being equal. You need the other things being equal would be they had really strong operating margin expansion in the retail business last quarter. Investors want to see that again. We're pretty certain that they'll see it again. They also want to see advertising revenue start maybe picking back up a little bit. The company's made a big effort, and it's got a lot more inventory they've been monetizing. So show it in the numbers. Let's see some acceleration in Amazon's advertising revenue. We think we're going to get that, too.
So, Mark, you don't need a two-handle in terms of the growth estimate for AWS. And I mean 20 seems to be the number that anything, even in the high teens, is going to be viewed as a disappointment. Are you saying there was a reset lower because of both Alphabet and Microsoft?
Oh, I think, yeah, I absolutely think there was a reset lower. But I don't want to be too finite about it, but I will. I think 19% is your over-under, Scott. So, 20% green, 18% red, and gray. That's the middle color. That's going to be 19%. So I think that's really your over/under on AWS growth, because 20% would show you acceleration. What the problem that both Azure and AWS that Google Cloud talked about was supply constraints. The question is whether AWS has been more capable of handling supply constraints than those other two cloud vendors. I don't know. I think I'm sticking with this 19% number. We'll find out in an hour.
Yes, we will. All right, Jay, what are you looking for most?
Yeah, no, I think Mark summed up the AWS piece. I think it's going to be huge. Clearly, there's no doubt about that. I think the other story that I think is going to be major for me is operating income. Operating income was up 56% year over year last quarter. We're expected 44% this quarter, which I think will be a phenomenal number. You know, what I kind of wean the clock to is obviously Jassy taking the helm, a couple of years ago. And obviously, he's been really cleaning up the business. He let go 27,000, employees over the last 2 years. So he's definitely focusing on operating income and margin. So margin growth will also be very important to me. Obviously, we're looking for at least 10% there. So I expect this to be a strong quarter all the way around. The retail business is obviously continuing to do well, getting back some of the pandemic gains that they had, retaining those gains. So I expect retail to also be strong. So those are some of the items that I'm looking for this quarter.
What about CapEx, Mark? It's the metric du jour, obviously, given what is happening with DeepSeek and what these other companies are saying they'll spend. $77 billion, is that the right number to look at for an annual spend?
Oh, for this year, yeah. But the question is whether they'll give CapEx guidance for 25. I'll make a bet with you, Scott. If they give CapEx guidance, it's going to be because it's a really large number, like 90 to 100 billion, and they want to get the market used to that number. And I think the stock would probably sell off on that unless there was acceleration in AWS. I do also want to make one quick point here, a wonderful historical point about Amazon tonight, Scott. I know you've been looking at Amazon for many, many years. This is going to be the first quarter in which Amazon's bigger than Walmart in terms of revenue. First time ever. I mean, I'm glad you
bring that up. Yeah, I'm glad you bring that up. And I was going to ask you about that because it is a milestone moment for this name. It obviously, brings up, how good the sales are going to be. Revenue growth, again, for, the likes of an Alphabet, revenue growth numbers were disappointing, the lowest growth rate since 23. How do we judge this versus that?
Well, for both of these, these companies have matured into their until their middle ages. We're doing 10% retail revenue growth for Amazon, and that would be a good number. So yeah, they need to maintain that, show sort of stability in that. And then what investors are going to want to look for, they're going to look for Amazon's other bets. Just like with Google, there's kind of new growth areas, although Waymo's still years away from being material, but at least they've got a Waymo. What's Amazon's Waymo? I think there's a couple of things that are out there that are actually very interesting, and they may start talking about them on this earnings call. One is Kuiper, the satellite broadband-based service. We should get some rocket launches that may impact the P&L, by the way, in the March quarter. So I'm looking for that. Amazon Pharmacy, I think that's a really interesting new growth area for them. And then they still haven't cracked the code on Amazon Grocery. They never, maybe they never will, but that's a really interesting growth area if they can figure out how to succeed in that market. That's a very difficult thing to do, but that's what I'm looking for, and investors will too. Where are my option plays?